A seismic shift in underwriting self-storage. Noah Starr is with me today. We're going to get into the latest update to Tract IQ that is literally reinventing how we gather data in the industry. And Terry Campbell, old friend of the show, Johnson Insurance, is back. He's going to share how he marries his faith with his daily practices at work in our segment, How Faith Fuels Your Business. Welcome to the inaugural episode of Storage Unlocked. I'm your host, Thaddeus Campbell. S3 Partners, 30 years, 300 plus, ground up developments across self-storage, small bay flex, and boat and RV. If you have a piece of raw land and need help from entitlements through construction, we can help make your dream come alive. Well, without further ado, Noah Starr, first and foremost, just want to say congratulations. It's been a monumental week. I know we're taping on a Thursday. You guys debuted your new product launch on Tuesday. It's been all over social media, everyone I talked to. So kudos on what you guys have been able to do. And I want you to take over and tell me exactly what you guys have brought to the platform. And then if you'll be so kind as to demonstrate for us what people are able to gather for information on Tract IQ now.
100%. It's so great to be with you again. You're awesome. I think the launch has been exciting, not just for us, but hopefully for the industry at large, to truly add that missing piece of data that has been so desperately needed in our industry. So excited to walk through it with you and talk through some other major upgrades that the storage industry has seen in just the first couple of weeks of the year. It's been kind of crazy.
Yeah, we kicked off 2026 with a bang for sure. So very excited. And by the way, I want to give a shout out to your marketing director, Nikki, who you just hired a few weeks ago. You guys' marketing of this launch has been next level. So anyway, just kudos to Nikki. Congratulations, because she came out of the gate really strong as well.
I appreciate it. I'm going to let her know. She sends her regards. She thinks you're awesome. But yeah, a ton of work behind the scenes to make the launch possible, and working with some awesome people at Inside Self Storage, Modern Storage Media, CRE Daily, a bunch of others, and some wonderful customers as well. So I'm excited to show you and the audience kind of what we've been cooking. And I'll start off by setting the scene. Thaddeus, you've been in storage for a number of years. How have you tracked competitor occupancy data in a market?
Two ways. Number one, we would make an assumption based on rates in the market, right? So we'd say, all right, rates are strong. It's well above where we need to be to underwrite to a successful development. We're going to assume, because rates are strong, that the market is not oversaturated. In hindsight, maybe not the greatest idea of how to underwrite. The second thing we would do, and this is old school Barry Sherman, president of S3 Partners, our founder, we might go register for a storage unit at a local facility and go walk it and just count locks. Of course, in today's day and age, with some of the technology and Da Vinci locks and other, keyless entry systems, that's not as easy as it used to be. So at the end of the day, Noah, we were making an assumption at a certain level of what that occupancy would be, unless we owned a facility in that market and could draw on our own data, which, we're not Extra Space, so we don't have that many facilities that we can draw on our own data for.
100%. I've spoken with dozens and dozens of groups over the last month about this problem. And this is not a you problem. This has been an industry-wide problem. And if you think about, I was on AJ Osborne's podcast as well, and we talked a little bit about this, but just occupancy data in all of self-storage, the way we talk about it is based on what the REITs report every quarter. And I think we do a great job of providing that information. However, the occupancy data that has driven the entire industry's conversation is around a couple thousand facilities that are the stabilized, highest performing locations at the best performing operators in the country. That has driven the conversation around occupancy to a degree. And if you couple that with the lack of information and quality data that goes back to time, most groups do what you did. They'll either try to build a predictive algorithm, they'll try to call the manager or walk up and ask them, and maybe they'll tell you it's 88, maybe they'll tell you it's 92, maybe they'll say, well, full up. You don't really know what it means. But the industry is largely just kind of ignored occupancy. It doesn't matter. It'll be between 90 and 93. Let's focus on rates. Yeah. So the first phase of what we launched, and this is, Tract IQ, we're currently in Dallas. What we launched on Tuesday is actually facility level occupancy data across $40 billion worth of assets across the US since 2021. So what you'd be able to do in Tract IQ is see the trend in Dallas, see all of the facilities that have occupancy data. And if you actually export this data, what you can do, we built this template where it will actually provide, and I blacked out the names because this is real data of real facilities, will actually provide the facility level occupancy data by quarter or by month for thousands of facilities across the US since 2021 to start, and eventually since 2018.
I'm going to, first of all, I feel honored because I've kind of followed this journey. You were the first person I called when I started a new style podcast. You agreed to be a part of that, which I was so grateful for. We've gotten to have you on the show 3-4 times in the past 6 months. And I've kind of heard this from you like, hey, what we're doing on Tract IQ right now is not the goal. To see this come to fruition and I keep calling it seismic. No, I don't know how else to say it. Listen, we were making assumptions on $15 to $20 million investments that we were going to make because that's the data that we had available. I want to just kind of ask you, how does it feel? Because I know this has been a mission of yours to improve the data that you're getting. How does it feel for Noah Starr, January 22nd, 2026, that you've been able to make this massive leap where somebody can now get actual occupancy data and trends to make a much more informed decision?
Yeah, I would say there's spent years on this problem, and this has candidly been the most exciting week in our company's history. We're so grateful for our partners and our customers, but we're so unsatisfied. And we're going to continue to push forward and continue to elevate this because, Thaddeus, what we're talking about here is not just occupancy data. Okay. And we're about to get into what's more of this upgrade. But I would say this is a monumental step for us and for the industry to truly add transparency so that we're making better decisions. So it feels really good, but a ton of work went into this and we're just so unsatisfied. I want to make one comment about the data. Like, how do we know it's right? These are all facilities that have CMBS loans. So we've partnered with Credit IQ, who's a licensed broker dealer with the SEC, to actually get this data. So if there's a storage facility with a CMBS loan, they have certain reporting disclosure requirements, and we've been able to get access to that data and make it available to our customers. So it's a really, really good step forward, but we're so unsatisfied.
One of the things I want to ask you, and I'm going to have you give these numbers, is, roughly the number of storage facilities that have that CMBS data, and then compare that to the total number of facilities that Tract IQ tracks in the industry, just to give an idea of the sample size that people are getting relative to the overall industry.
For sure. So just to give you a sense, we track over 70,000 storage facilities across the US that are both under development or operating.
Yeah.
We track about 66,000 that are active that we have verified by hand. And then the way that I think about it is there are 19,000 storage facilities across the US that are active and are 50,000 square feet or larger. Most CMBS loans tend to be the larger facilities that are more institutional quality. We have data on about 4,000 of these facilities since 2018. So call it around 21% is how I like to think about coverage for the institutional quality assets.
Certainly would be a representative sample size where you would feel very comfortable making assumptions on the greater whole.
Well, we're going to take it a step further, right? Because we don't just get occupancy data for these facilities, Thaddeus. Thaddeus, how have you tracked achieve rates in a market?
We haven't, quite frankly. Every once in a while, I might get one of my friends at one of the REITs to give me their real numbers from stores they own. That's like pulling teeth. On the flip side, we're using Tract IQ to go and see what achieved, not what achieved from, the web rates and the street rates that are live on websites that you guys are pulling pretty much daily from across the country. And we're making an assumption based on that. We'll go back, as you said, to, the quarterly earnings reports from the REITs to try and get a little bit of flavor of, what do web and street rates look like relative to achieve rates across the industry right now. But even then, we're not making in our underwriting, we're not banking on that 10 or 20% increase that achieve rates might be over web and street rates, because quite frankly, trying to go to the bank or go to your investors and sell that story is very difficult.
Okay. And what about, I don't know, things in storage that no one talks about? What about stabilized NOI in a market, stabilized NOI margins, expense loads, things like that for facilities?
Not even something that we were thinking about in terms of achieve rates. Obviously, we'd do a pro forma and we'd come up with what we think it's going to be. But again, that was based on an assumption of occupancy and using street rates and web rates to try and come up with. And as well as I do, over the last 3-4 years, as we came out of the COVID boom, which number were you going to use? Were you going to use the web rate as your pricing model? Were you going to use the street rate as your pricing model? We for many periods in that stretch had no idea what achieve rates might look like. So yeah, to your point, it was very much a guessing game.
Awesome. And again,
In
industry,
hindsight, I don't know if that was awesome or not, Noah.
I think we're going to look back at this period of time flabbergasted that people in the industry invested billions of capital without having access to data like this. So you see these little download buttons here?
Yep.
If you actually click these download buttons, I'm going to use a sample facility. We actually also get the in-place financial statements for for a lot of these facilities. So that will include the rental income. It will include the total revenue, each expense line item. How do you underwrite property taxes? How do you underwrite insurance, utilities, R&M, payroll? All of that is here for these facilities. We'll have things like NOI, NOI margin, CapEx, and then by leveraging in year-over-year changes and the net rentable square footage in Tract IQ, you can now see this on a per square foot basis.
Yep. I know that I have a $23 a square foot facility operating in that market, which is a number that allows me to make a much more informed decision about whether or not I can go do a ground up development.
I was talking to someone yesterday on a demo, and he owns about 6 locations, and it's part of a family business. And he was telling me how he saw that we came out with this data and wanted to book a call, that he looks back at his father when his father was doing storage development in the 70s, 80s, 90s. His dad would say, "Oh, a lot of traffic, looks like it's growing. Let's throw up some storage." And he looks back at his dad as like, what the heck were they doing? Yeah. He realized he's going to look back on what he's been doing for the last 10, 20 years, looking at things like website prices, which are important, supply per capita, which are important, and demographics and demand drivers and all of these things. But we've never been able to see true operating performance at scale. And this is a huge unlock. So we're talking about $40 billion worth of assets where you can go see their actual revenue, expenses, NOI for the first time.
I'm almost tempted to say, are they really important, or are they important in as much as that's the data we could make our pro formas off of? Did they become important because that's what we had access to? Listen, we know what's been going on in the last few years in the industry. I say last few years, really it's going back to 2017, 18. COVID covered it up a little bit by hiding some of the oversupply, but there's been markets that have been devastated by oversupply that have had taken a very long time to fill that new supply. And why did that oversupply happen? Well, because you didn't have access to this kind of data. You were making assumptions based on, hey, there's a bunch of houses going up. This is going to be a great place for storage, when maybe there was already so much supply in that market that was underoccupied, but you just didn't have access to the numbers.
I'll say this, it matters. However, things like here at the top, which has been the focal point of the industry, square foot per capita, right? Population counts, median income, we track all this as well as anyone. We track all the incoming development sites. We pull all the website prices into one place so you can, with confidence, underwrite deals. If you were to buy a stock and you were to evaluate Coke versus Pepsi, the first thing you look for is not going to be the beverage consumption per capita of Coke versus Pepsi in the country.
Yeah.
You're going to look at their operating performance. You're going to look at their revenues. You're going to look at their growth, their earnings. You're going to look at their margins. Then maybe you'll look at the supply of beverage consumption by country to understand future growth potential, but it's part of the analysis. And I would say demographics, traffic counts, rental rates for both street and web prices, all of that should be shaping the narrative and the context of a deal, but it should not and has never been the defensible underwriting standard that we should only rely on as an industry. And that, I think, is changing right now.
What strikes me, and when this dawned on me, it changed my whole thinking. Ultimately, the net rentable per square foot that we have as a number nationally and individually in markets, all that is somebody compiling the total square footage that exists and dividing it by the population. It's not indicative of what the market's really demanding because it's not tied to occupancy and performance numbers as well. It's just simply a math equation. How much square footage is in greater Dallas-Fort Worth? Divide that by the total number of people, and there's your net rentable per square foot number. That's such a number that's out of context if you don't tie it then to what are the rates that are happening in the market relative to that net rentable square foot per capita and the occupancy trends that are happening. So for you folks to be able to add this extra data, listen, I've been fired up for well over a month. You were on the show in early December and kind of teased what was coming in January. I'll give myself credit, Noah. I did not spill the beans on this one, even though I might have known a little bit ahead of time. I actually kept my mouth shut. But this was a hard one to keep shut because what you've done now is you've allowed us to say, okay, Texas's square foot per capita is 10. Massachusetts's square foot per capita is 4. What does that really mean relative to both of those? Did I get it right on? Was I literally
you got it pretty right on. Massachusetts is 4.48. I was going to say the exact kind of concept of you look at Manhattan, you look at New York.
Yeah.
New York square foot per capita is 3. Texas, it's close to 10. Why is that? Well, in Texas, there aren't many basements because the soil makes it really expensive to build basements. New York is the opposite. You have basements in many homes. There are so many things that play into square foot per capita and the need for storage. And to your point, we as humans are generally, we like to see things, right? So anyone can go measure the square footage and use census data to see how many people live there and what the square foot per capita is. And you can generally get pretty close. And I think we do that the best. But to your point, it's overly simplistic, right? It can be part of the conversation, but we've just never thought it was possible to see true verified operating performance at scale. And now we can. But I would even say, going back to our industry, right? We've been diagnosing investment opportunities as if a doctor would prescribe medicine based on your symptoms. Like you're coughing, you look a little run down, so I'm just going to prescribe you this medication instead of let's get a blood test. Let's actually know what's going on, and then we'll prescribe you the medication. That's what we're trying to do in storage.
Noah, blown away. I've shared this with you offline. I'll share it with the people that are watching. I've been using Tract IQ for a couple of years now. Loved the site before this. Obviously, for any of you guys who follow me who are out there doing small bay flex, their home and commercial development data is unbelievably useful for what it is we do. Obviously, if you're a storage operator, this is next level. And tell people, hey, there you go. My guy Eric behind the scenes, he's on top of us. TractIQ.com. Reach out to their team, get a demo of this, because quite frankly, if you still use the metrics we were using 3 days ago to make decisions in storage, you're opening yourself up to get left behind in this industry. So Noah, again, I'll finish this segment by just saying kudos to you and your team. Incredible what you've been able to do.
Thank you for letting me share this. It's honestly awesome to be here with you. And to your point, this is table stakes now. We have groups actively using this right now, and it's going to change a lot of things. So excited to regroup with whoever sees this and see if there's a partnership opportunity.
I think it's fascinating. One of the things I've been talking about for 6 months is how does someone operate in this environment if they don't have the data that Extra Space and Public have. And I really thought we were going to see a faster shift to those largest competitors in the market taking over, even groups that are bigger, like the Madison Capitals of the world, the StoreQuests of the world, William Warren Group, Go Store at the Madison Capital brand. They have so much access to their own information, right? But really, with what you provided with the CMBS loans, there's only one or two people in the market that have that much in-house information. So you've really been able now to democratize the access to information in the industry, which I think is fantastic for the long-term health of our asset class.
Yeah, it's really neat. And even just the largest operator of storage in the country, they have about, I think it's Extra Space, with about $29 billion of assets under management. We have $40 billion worth of assets of operating performance in all markets across the country, across dozens of brand types. So we're not going to have as deep data on Extra Space as they will and the other operators, but we're going to have a breadth of data that's never been truly understood. And I'm curious to see what the takeaways and the ramifications are for the groups who are able to tap into that effectively.
I love how you did that too, because I was going by store count when in reality the amount of revenue is a more significant number, and to be 30% higher than what Extra Space is operating is absolutely phenomenal as far as your data set. I'm going to shift a little bit here, and we're going to talk about a couple things. I want to start off with, we kind of alluded to at the beginning, just a massive first couple of weeks. We have Noah Springer appointed president of Extra Space the first Monday of the full week of the year. Kiwi II Construction, bought by Janus International, still operating independently. Kudos to Wayne and his team, who've been proud supporters of my other podcast. Really love those guys for that. And then just today, I read Cubby, software management system, property management system, $67 million raised in a Series A round. Talk to me broadly about what's happening in the amount of money that is coming into self-storage and what it means for the industry as a whole.
To your point, each of these announcements could have been industry defining news for the last number of years. So, tons of credit to the Cubby team, Matt and Michael, and all the things that they've built. A lot of respect for them. And obviously it's a huge milestone for their company. And I think this demonstrates a continued institutionalization of our asset class, right? Self-storage in the 80s, 90s, early 2000s was not an institutional asset class. You can look at cap rates in the 10s. People would just build, and in hindsight, most of the time, fill up and do really well and make money and be able to do it again. And our industry has continued to grow, where now so much capital is flooding into our space that unlocks opportunities in software for FMS options. It unlocks, to your point, further consolidation in the construction space with the Kiwi acquisition by Janus. And then, of course, it creates needs that were not even necessarily a need, such as the data that we provide and truly making verified operating performance available at scale so that we can understand the gap between web, street, and achieve rates. So all of this is an industry maturing, it's an industry growing, and it's an industry attracting awesome people to solve problems.
You said something a month ago when you're on the show, the beginning of December, that stuck with me, which is that a lot of decisions that were made over the first 40, 50 years of the industry, the macro tailwinds that were behind this industry really kind of helped some of those decisions turn out to be genius, even though the formula that went into making those decisions might not have been as refined as we're seeing now. I think, to your point, with the consolidation and the continued institutionalization, I was in New York for the investor forum 2 weeks ago. I was out in Snowmass last week for the ski workshop. A very similar theme in both of those situations, although very different conferences in terms of how they're structured. But the amount of equity money that is continuing to try and force its way into the industry, I don't think that's going anywhere. I think that the players that are going to make it, they're going to be the ones that are making better decisions, right? Because that big institutional money isn't going to keep writing checks if you're not returning what it is you said you were going to return over time. So really excited to keep an eye on what's going on. One more thing I want to touch on before I let you go, Noah, it's been an interesting week coming out of the White House. We had last week announcement that the DOJ is investigating Jerome Powell. You know, the overall overriding concept is Trump wants further rate cuts and is trying to kind of force that to happen from the Fed. Then we had the whole Greenland thing where he's on this thing about taking over Greenland. He's in Davos yesterday, says no. But what's happened in the last week is like a 0.1% or more rise in the 10-year Treasury. Kind of interesting given how many cuts to the Fed there have been in the last three meetings. I'm interested for you. I know you come from the financial investment analyst background, to put on your old school financial analyst hat and talk to me a little bit about what's happening geopolitically and on a macro level with interest rates and the 10-year Treasury and how you think it might affect what's going on in storage.
I don't know the square foot per capita of storage in Greenland, but we can potentially we might want to look at that market as a potential expansion.
Well, there's less people in the whole country than we want to have in a 5-mile radius to build something new. So I wouldn't get too excited. There's like 63,000 people in the whole country.
Yeah, I would say, I studied economics in school, and, anytime you have external events, whether they're political or, you know, conflicts via countries or things like that, the markets get a little unsettled. And I think a lot of these decisions, anytime a president sues the head of our Treasury department or tries to bring charges to, I think Jamie Dimon today was just brought charges, or there's some crazy stuff going on. So that ultimately will cause a lot of investors to flee to safety, right? So you'll see gold prices, you'll see, Treasury bonds, you'll see all these things move in really weird ways. And I think it's too early to tell what is actually going to happen, how much of this is true action that, the president will deliver on versus bluster and, creating something that everyone can get emotional over. But ultimately, I think if we've studied in economics, when the Federal Reserve or when financial infrastructure becomes weaponized by politicians in other countries, whether it's America or others, it doesn't usually lead to good outcomes. You see things like hyperinflation. You look at countries like Argentina and some others where you create potentially really bad consequences. Because if we were to just cut rates down to zero, it might be good for asset prices, but that's bad for inflation and it causes all sorts of things. So ideally, we would want objective, really honest, high integrity people making the best decisions they can with data and with empathy and all these things. And, I hope we don't, you know, I hope that isn't jeopardized in the Federal Reserve through things like this.
He's Noah Starr. His company is Tract IQ. He bought the company a couple years ago and has just been on a mission to improve the access to data. As he said, he's not satisfied yet, but I got to tell you, going through Tract IQ lately as a developer is much more satisfying than what access to data used to be like. You can get a hold of them at tractiq.com. Quite frankly, if you haven't looked at their platform, you're doing yourself a disservice. So Noah, very much appreciate you coming. I know how busy you guys have been the last couple of days after this product launch, and thank you very much for coming and sharing your time and your insight into the industry.
Thank you, Thaddeus. This is awesome. I appreciate you.
Appreciate you back, Noah, and look forward to having you back many more times. Listen, we always end the show with a very special segment. This week, we get to invite our risk partner, Johnson Insurance, and Terry Campbell, who's building out that platform and self-storage for his hometown insurance company, Johnson Insurance. Terry makes no bones about his faith in God and Jesus Christ as his savior. And I was very excited to sit down with him and talk about how faith fuels his business.
There's two versions of the golden rule. One is who has the gold makes the rules, but the one about treating people the way you would want to be treated. Business is so competitive anymore and so cutthroat, and people will do or say whatever they have to make a sale, to get an order, and that's it's not the way to do it, because it comes back to you. We're not fighting flesh and blood. We're fighting against principalities of evil and darkness, and I see that sometimes in the way that sometimes how people do business by just, flat out sometimes lying or throwing mud or things like that. I'm just not going to do it. And I tell you, over the years, by just being straight up and honest, I've had people come back that I didn't do business with the first time around, but they came back because of that, because of being honest about it and treating the way that we should, and treating your competitors the way you should, living those principles that are part of your faith, like one of the 10 Commandments: you shall not lie. Tell the truth. Just be honest, be straightforward, and going out and helping people, even if you're not going to get anything back for it. You just said, when you go out and you spread things and it comes back to you. One thing I have found over the years, I have given away thousands of hours of, I can call it consultation or whatever, just free advice, and using my experience and years of experience in giving. I've had people say, "Why are you not charging for this?" And I'm like, it'll come back. I've had people over the years. I've actually given many, many more hours out in a mentorship capacity than I've ever received. But I have received that, and it feels good. I love to be able to help people, especially when they're just getting started. They've not been in the business yet and they want to, but to see somebody help them with a concept or an idea, this is what I'm thinking about, and then see them all the way through that, now they own it and they're successful. And that's happened many times over the years, and it's very fulfilling to me. And it's not all about the money. We all need money to pay the bills. We need money. We want money to have somewhat of a comfortable life and not starve to death or freeze to death or anything like that. But everything is not all about money, because if it was, I'd be doing something else, or I'd be charging for my time all the time. And I think it just boils down to helping folks, which is what we're supposed to do.
A truly special human being. The full episode of How Faith Fuels Your Business, my complete sit down with Terry Campbell, will be available on the YouTube channel, youtube.com/@Storage Unlocked on Monday at noon. So you can see Terry's full episode. Of course, I'll post that to my LinkedIn as well, so you can catch it there. Want to give Terry just so much thanks for supporting the show and for his contributions to our industry. Literally unmatched. Nobody has done any more than what Terry Campbell has done in his role. Started out at Betco as a CAD designer, of course, built Live Oak's platform, was the president of Copper Storage Management for a while, now building out the risk side of Johnson Insurance storage industry assets. Really, really thankful to have him as a friend in the industry. Again, thank you to Noah Starr and Tract IQ, and congratulations to them on an incredible moment for our industry. The ability to have this access to occupancy and rate data for 20% of the institutional grade properties in the country is going to change the business, in my opinion. So tractiq.com, check them out. That is it for the inaugural edition of Storage Unlocked. I'm your host, Thaddeus Campbell, Director of Business Development and Strategic Branding at S3 Partners. We have over 30 years experience with over 300 ground-up developments across storage, boat and RV, and small bay industrial flex. If you have a piece of raw land and you need some help, whether it's on the early entitlements, whether it's on getting permits, getting your architectural sets done, or running the project through construction, we can help make your dream come alive. I will see everybody next week.